Who is reading?
Hello, Doc. Good evening.
Good evening, please. Can you read for us?
Okay, Doc, sir. Number 27. Professional skepticism requires that the auditor assume that management is A. Reasonably honest, B. Neither honest nor dishonest, C. Not necessarily honest, and D. Dishonest unless proved otherwise.
Mhm. So I mean. Okay, so please, which of them is the answer? Please, I read together.
Yes, Doc, we are together. Colleagues, Doc is in. Let's begin to talk.
Last time I explained what you mean by professional skepticism. So, based on what I explained, I want you to see whether professional skepticism requires auditor as management is what? Is it honest, or they are neither not honest nor dishonest? They are dishonest unless proven otherwise, or they think they are not necessarily honest.
Uh, Hello, Doc.
Yes, sir.
Uh, I will go for not necessarily honest.
Okay. But how do you understand professional skepticism first before we go in for that?
Professional skepticism doesn't require auditors to consider management being honest.
So professional skepticism asks auditors to be like they have a question in mind. That's what they do. They do have a
Uh,
question in mind. So if they have a question in mind, so if they have a question in mind, do you think based on that question in mind that they have, they should um oh, please can you help us by muting yourself? Okay. Right. So if they have a question in mind, what I'm also thinking is that if they have a question in mind, they they assume that management is neither honest or dishonest. That's what I think it has to be. Because they have a question in mind. They will not say you are dishonest. They don't say you are honest because they are now coming to look into whatever you have prepared or the assertions you have made to know whether they comply with the relevant standards that requires you to prepare the account, whether you have complies with all the regulations and the rules. So that is what they do. So when they come in there, they are not there to say you are dishonest or you are honest. They are just coming in having a question in mind. Is that okay with my submission?
yes, sir.
Right. Okay. So let's go to the next set. My brother can read for us.
Number 28. The audit engagement letter
generally should include a reference to each of the following except the audit engagement letter generally should include a reference to each of the following except limitations of auditing, responsibilities of management with respect to audit work, expectations of receiving a written management representation letter, and description of the auditor's method of sample selection.
So class, what do you think the engagement letter generally indicates? Engagement letter. Oh, please, this is a revision class. So this is what we have done so far. So I expect that you have to call. You are not here to just listen to me. You are here to at least tell us what you have learned and how we are applying toward the set of questions that we are asking you. So please, just contribute. There is no wrong answer here unless maybe you are not sure of what you are saying. But at least each of the issues you see, they are indication of something, but one of them stands out to be the answer. So you can express your opinion on all the questions, all the possible solutions over there, and see whether they are in line with what you are thinking. So please do that for me. So I'm not the only one who is talking. Please.
Doc, I think the answer is A, limitation of auditing. That it shouldn't be included in the audit engagement letter. So can you hear me?
I can hear you. We are
Yes.
thinking it is limitation of auditing engagement letter. It is telling them their limitations. Okay. Okay. That we will put it.
It shouldn't. It should not. That is an
It
exemption.
should include a reference to
Except.
each of the following, except.
Except. Yes.
So you think the limitation shouldn't, that you are telling us that the limitation, the engagement letter does not contain the limitation.
Yes, sir.
Oh, okay.
Please, me too. Me too. I think that that's description of auditor's method of sample selection.
Why do you say that? Senior, please, why do you say that?
Yes, sir.
Why do you say that, please?
Yeah, if auditors are going to audit any institution, they have to prepare the audit letter, that's engagement letter, which ensures the limitation of an auditing, that is, may not detect all fraud, and also the management responsibility and their expectation of writing. But the description of auditing method of sample selection is not part of it because the plan of the auditing actions is what entails the description of the auditing method of selection. That's part of the plans of auditing. Engagement letter.
Okay. So, all I can, if there is no other response, I can also say that the engagement letter, when they have it, it will contain the limitation of the auditing that they are going to do. So to tell us their scope of engagement, they will tell us the responsibility of management as part of the audit. So we realize that we've learned responsibility of management. we've learned about them. It will tell us the expectation of receiving a written management representation letter. Yes, it is there. But in terms of the sample they are going to do, they will never tell you. If you tell them that we should audit a particular payroll, whether they are going to use 100, whether they are going to use 40, or the method they are going to use, whether they are going to use convenience sampling, random sampling, or those ones, they will never inform you about it. But that one, they will decide. So in the engagement letter, the auditor will not put in there the description of the auditor's method of sample selection. So I'll go in for the D, because for the scope, the limitation, they will tell you. Their responsibility of management, they will tell you. Written representation for management, as in their letter, it will be known in the audit engagement letter. But in terms of the method of description or the method of sample selection, that one, they will never tell you. Okay. So the answer is the D one. Let's go to 29.
The use of an audit engagement letter is the best method of assuring the auditor will have which of the following? A. Auditor will obtain sufficient appropriate audit evidence. B. Management representation letter. C. Access to all books, accounts, and vouchers required for audit purpose. And D. Cooperation from other auditors.
So please, class, what is the answer?
Yeah, please, the answer is C.
So the answer is what?
Access to C. Access to all books,
C.
accounts, what is required for auditing. Yes, C.
Okay. Who was again?
So I second what he said. C.
Access to all books, accounts, vouchers required for the audit purpose. Yes, indeed, it's true.
Yes.
Yes, indeed, it's true. It's true. Thank you. Okay. So the answer is, let's go to 30.
An auditor who accepts an audit but does not possess the industry expertise of the business entity should A. Engage experts, B. Obtain knowledge of matters that relate to the nature of entity's business, C. Inform management about it, and D. Take help of other auditors.
So auditors who accept an audit and does not possess the industry expertise, what do you think they should do?
They should
So you
engage
see that,
experts.
okay, someone said they should engage experts. You need to justify why that particular answer is not the D, and it is not the C, and it's not the B. The answers are related. One is saying you should engage experts. Other is saying you should inform management about it. Some people say you should take help of other auditors. Others are saying that obtain knowledge of matters that relate to the nature of the of entity's business. So why would your answer be different from other answers?
Mercy, tell us why you chose A.
So I chose A because the auditor cannot go back to learn before he will come back to edit. And when you inform management about it, they are going to take you out. And then
When you take help from other auditors,
yes, like they will go and employ a different person. And then if you are choosing other auditors, I don't think it will be from the chosen auditor to take another auditor. It should come from the management.
okay. But going to obtain knowledge about the matters that relate to the nature of the business, would that also help you?
It will, but it will delay the process for us. So
I see. Okay, mercy. That is a fair justification. Let's go to another person. So you choose your answer, then you justify why you choose that answer.
Doc, sir.
Andrew?
Yes, Doc. Doc, I am going for I'm going for B. Obtain knowledge of matters that relate to the nature of entities business.
Why do you say that?
Yes. Doc, I think that from the explanations that you have given to us so far, and I think a similar question came last week in our discussion, an auditor needs to have expertise in a particular industry, not that alone, also in a professional standards. And for that reason, he needs to acquire sufficient knowledge of that industry that he is going to work for, either before or during the engagement. There is a need for that sufficient. He needs to have more knowledge of the entity that he is going to, the business of the entity that he is going to work for. That's why I'm going for the B. Thank you.
Okay, well noted. Well noted. Yes, another one who supports Mercy or Andrew. I want you people to come in. You shouldn't leave the question for us to decide. Others also should come in.
Please, I support Andrews. I second him.
That we should obtain knowledge about the matter related to the nature of the entity's business.
Yes, please.
And so, how would you explain it?
Engaging experts is only the necessary first step to gain understanding of themselves. And the second one, that's the point two, you must obtain knowledge of the business. If you obtain knowledge of the business, you will be acquainted with everything that entail in that entity. So auditing them will be easily for you to be able to do your work smoothly. And informing management is primarily requirement. That's gaining knowledge of it. If you inform management, it's the primary requirement. And also the D one, taking help of other auditors is not the first prescription step to take. So I think the B is the correct answer. As you must obtain knowledge of the business for you to be able to do your work diligently.
Thank you. So, Madam Mercy, would you still change your mind or you still go with what you are saying before I come in?
Say I'm still on engage.
Engage
Engages.
Okay.
Sir,
So yes,
Sir, I also be on the same bed with my brothers for the B.
for the B.
Yes.
Mhm.
My reason is that as an auditor, you need to be professional, and as you taught us, you should have a fair knowledge about the nature of the business entity. And I think that before they will choose you as an auditor, they know that for these things, this requirement, you are aware. So if you don't uh, immediately uh, get to know the nature of that business, it will be like you are not even up to the task, and it will even expose you. So for me, quickly, I will try as much as possible to learn the nature of that business entity before I assume my work as an auditor for that
Right,
entity.
right, right. Okay. Thank you all for your submission. So let me start from Madam Mercy's point of view. Engage experts. So even if you are going to audit a particular company and you don't possess the industry expertise of the business entity, the first thing that you not even think about expertise. It's just about you going to understand their nature of their business. Because if you understand the nature of their business and you read more about it, that is what will now inform you that, okay, let me go and see this expertise in this area to now teach me how, or let me go into my own organization. Do I have expertise in that area for them to tell me that, okay, this engagement or this auditing you are going to do, this is what you have to do, this is what you have to do. So without you getting to know their nature of business, you will never uh, consult an expertise, because before you are going to do something, you don't have industry expertise in the area, but you need to explain something to someone for the person to tell you that, okay, this is what you are going to face. So when you're going to face this thing, this is what I think you should do. So by you getting the understanding of their nature of business, that will now help you to now seek help from your expertise. If you now go in for help from expertise and you still think that this help is not is not good for you, then you think you cannot go in, then we can now inform management about it. And then they can even take help from other auditors who would like to come in. So the first point of call is about you understanding the nature of the business you are going to deal with. Then now it will now inform you that, okay, should I go in for an expert advice or I shouldn't go in for an expert advice? Madam Mercy, please, do you get the argument?
Yes, sir.
Yes. So yes, you have to go for an expert, but you need to understand the nature of the business. Then it will now inform you that, okay, should I go in for the expert or shouldn't go in for the expert? So our brother's answer is the B stands out first before any other answer. All right. Thank you for the explanation. I'm really glad you are understanding the issues that we are facing today. Okay. Our brother, please, let's go to the next one, 31.
Which of the following is not a quality control consideration on accepting a new client? A. Availability of audit assistance with necessary skill and competence. B. Provision of other services to the client which may impair independence. C. Predecessors auditors advice as to whether audit fees were paid promptly. And D. Review of audit work done by one partner by the other.
So what do you think the answer will be? And you need to explain why you chose that answer.
Yes, sir, please. I think the answer is C.
The answer is C.
That's yes, please. Predecessors at auditors advice as to whether audit fees were paid promptly. Not part of the quality control.
Okay, who seconds our brother? Yes.
Doc,
Yes, please.
I will not support, but also
Okay.
come out with the point that we are talking about quality control.
Yes.
And so, for that matter, I am going for D, which talks about review of audit work done by one partner by the other. So, from the explanations we have received so far, when accepting a new client or when you are accepting a new client, there are certain quality control procedures that you must follow. Before you accept. So looking at what we have there, what stands out, we all the three are part of the quality control measures you put in place, except the last one, which is the D. That's the review of the audit work done. It's let me say that it is not part of the quality control measures that we use so far as auditing is concerned.
So, Mr. Andrew,
Yes,
if I
sir.
may come,
Sir,
okay. So, yes, okay. Mr. Nelson, please come in first before I address the issue.
I want I want to justify my answer. Okay. Talking
Okay.
of the quality control, that's as my brother has already just said. It's all about how to relate to the firm's policy and procedures to ensure that audits are performed in compliance with professional standards. And looking at the first point, that availability of audit assistance with necessary skills and competence is part of quality control auditing. That before you accept a client, you must first ensure that it has a human resource to perform the engagement promptly and properly. And when you look at the second one, the B, that provision of other service to the client, which may impair independence. It's also the fundamental principles of auditing. That's independence is the fundamental principle of auditing. And predecessors advised us to whether the audit fees were paid promptly. It's not part of the quality control, because if you want to inquire about whether the fees are or the entity is able to pay their fees promptly, that one is just a normal thing to find out, but it's not a part of the entity procedure and policies. It's part of just, you are just finding out whether they are able to do or to perform their duties by paying the audit fee, but it's not part of the quality control procedures. And also the D1, review of audit work done by one partner by the party. You have to review to see that whoever or any auditor that has come before you has done their work diligently. That one too is part of the quality control procedures of the entity. That's what I want to use to justify my answer. Thank you.
Okay, Doc,
Yes, please.
let me come in again to buttress my point of the D.
Okay.
What I am saying is simple. He has cleared that portion that it is part of the quality control measures, not yes. But what I am saying is that this kind of activity or action is taken after the engagement has been accepted. We don't do what do you call it? You don't review the audit of someone's work whilst you have not accepted the offer. So you accept the engagement before you do this particular assessment that we are talking about. So I still stand with my review as the answer. Thank
Okay,
you.
who else also supports our brothers? They really make the thing open for us to justify very well. That if you want to ensure control, quality, or quality control, when you accept a new order, you need to. Our brother is saying that the one which is not part, our first brother Nelson is saying the one which is not part is that your predecessor's audit advice as to whether the audit fees were paid promptly. He thinks that that one shouldn't come in at all. That one shouldn't come into because that one is just maybe an informal conversation that you are having with the auditors, the other auditors. And you think that one does not form part of the quality control, because it's about quality. But, and our brother Andrew is also saying that, no, he also thinks that if you review the audit work done by the other partner, a review of audit work done by one partner by the other, he thinks that one too is not a quality control. So who else will support that? I want one person to come in and then give a justification for supporting the other, then I can now conclude on that question. So kindly note that the auditing questions, this is how they look like. It's like you'll be thinking about it, and then it's like you don't even know which of them, but one of them is the right answer. One of them is the right answer. Okay. So to ensure quality control, you need to know whether your audit assistants, they have the skills and the competency. That one is a core thing you must have. That is one. Provision of other services to the clients which may impair independence. Yes, some auditors, this maybe your audit firm may have helped your client in doing the tax filing or preparation of accounts for tax purposes, or they may have also provided that it may have be the people who prepare the account for them. So if you are going to be the same person who is going to audit that same account prepared by your own company, that is self-review. It will affect your independence. So that one too is quality control. Now, review of work done by one partner by the other. Indeed, it's true. It's a way of checking whether everything is fine. So your own work, you have done the auditing, and you are reviewing it just like this one say, let me review the work and see whether indeed the right thing was that. That's why always there are supervisors or they are team leaders. So the team lead or the audit manager has other audit assistants or other associates. So as they have audited the company, then the leader will not ask that. So let other people also review the same company and the same audit firm. Let other people also review what you have done and see whether what you did was right. That's also ensuring quality control. But you going in for your predecessor's advice as to whether the last payment was done or it wasn't paid promptly, that one doesn't bring about quality. Indeed, it's true, you can do it because you need to know whether, for sure, if you work, you need to be paid. So you need to, but it doesn't bring about quality. It can be done informally or as part of your engagement with the, because we said that before you go in for the audit, you need to also to consult the previous auditors and get to know how they left the organization. Was it that because of payment that they left the organization? Or we need to get understanding of what happened during their time. So when they brief you that, they can even tell you in terms of the payment, how the payment was done. Yes, they will tell you that. But that will not ensure quality control. That will not ensure quality control. So my brother Andrews, do you get my explanation for this?
Yes, Doc.
Okay, maybe if you are still in support of yours too, you can also come in and then justify. But I believe that going for the advice of other auditors in terms of the fees that was paid will not ensure quality control. But if you are reviewing the work, your own work, other partners from your own company, one is looking at it. Did you do it well? It's not that you're going for a different company for, even if you're asking a different auditors to review the work, it's possible. It's to ensure quality. To ensure quality. So we should know that. All right. So let's go to that. Yes, please.
I want to verify something.
You can verify.
I remember when you were tweeting the threat to compliance with fundamental principles.
Yes.
One of them that we made mention of is the self-interest, where you gave us some of the causes that with the self-interest threats, the auditor may not be able to act subjectively and the independence. But with the causes, one of the causes that you made mention was that when there is an overdue fees, it can also affect the independence of the auditor.
Yes.
So with it's not so being objective and trying to be independent of the work they are going to do is not part of a quality control. That if you're an auditor, you also want to find out how payments were made, how prompt the payments were made, so that it can also help you in order not to deprive you of the work that you are going to do. Is payment of overdue fees when you are considering not part of quality control?
Okay. Thank you. So when I was discussing about those points, yes, I made mention of what you said. Yes. But looking at example that I am an audit firm, I have audited you. You didn't pay me. You told me you will pay me later. The payment has not come. The following period, I'm going to audit you. I'm the same company. I'm going to audit you, and you have not paid me. That one will affect my independence because I'm the one coming in. In terms of the other auditors who may have, because this is your predecessor, the one who came before you. So the one who came before you, you are asking the person to asking about the fees. Maybe it's possible that the type of engagement or the type of assessment that they did or the type of audit they did, maybe the company was not having enough money. That's the reason why maybe they didn't pay them at that point, or they didn't pay them early, or they paid them early. So that one will not affect the quality of your work we are going to do. So that one is the least, even if we are considering, because how others was treated in terms of the fees, though can affect you, but some point in time, it's possible they may not even affect your new engagement. Because maybe your audit you are going to do, the type of samples you are going to work with may be different from the scope that you are dealing with, may be different from their scope. So in terms of the fees, will not actually affect you much or affect your independence. That's what I'm saying, that maybe the treatment that we give them in terms of the fees and other, maybe they did something that we didn't pay them on time, or did something that I paid them on time. But when as we are coming in, we are doing a new engagement. An engagement is like telling us the things that we have to do. So based on the things that we come to do, in terms of payment of fees, we are not interested in the payment of fees promptly or maybe at a later date. We are interested about quality of the things you are going to do. So if you tell me that I should look at, I shouldn't pay attention about the review of work done by one partner by the other. Because review is something that we need to be done. So if review is not well done, it means it can affect the quality of something. For sometimes you do something, you even send it to your superiors to review the work you have done and know that whether you have done the right thing or not. That will ensure quality. So if I'm going for D as the answer, then that one will not help me. Because every work that we do needs to be reviewed by the other to see whether we have done the right thing or not. Even if other auditors come, they can review the work we have done. That is what we. So please, that's the reason why I will stand in for that particular answer. Please, are you okay with what I'm saying?
Yes, sir.
Right. Please, 32.
When issuing unqualified opinion, the auditor who evaluates the audit findings should be satisfied that the A amount of known misstatement is documented in working papers. B, estimate of the total likely misstatement is less than materiality level. C, estimate of the total likely misstatement is more than materially level. And D, estimate of the total likely misstatement cannot be made.
Okay, so when they are issuing unqualified opinion, so this one you need to think about. At what point in time would an auditor issue unqualified opinion? So you have this idea at the back of your mind, then you now come in to answer the question.
So please come again.
I'm saying that you need to understand what do you mean by unqualified opinion. Circumstance that will necessitate for the auditor to issue an unqualified opinion. If you know that, then you now go in to select the answer. So what circumstance will the auditor issue unqualified opinion? So based on that idea you have, be able to answer the question there.
Sir, yeah, with the unqualified opinion, it means that the auditor has thoroughly examined the financial statement and has come to conclusion that the statement being presented has a true and fair view, and again is being prepared under in accordance with the standards, and then has also no material misstatement. That is about the unqualified opinion.
Okay, so if that is the unqualified opinion, as you have said. So which of them is the answer?
B.
Please, you said
B.
B. Why do you say B?
Estimate of the total likely misstatement is less than materiality level because there is less misstatement and
There is less misstatement and the maturity level. Okay, so as I said, is B. Who is in support of this answer?
I second her.
Right. So the answer is B. Thank you. Answer is B. Let's go to 33.
33. Analytical procedures issued in the planning stage of an audit. Generally, analytical procedures issued in the planning stage of an audit generally A, helps to determine the nature, timing, and extent of other audit procedures. B, directs attention to potential risk areas. C, indicates important aspects of business. And D, all of the above.
Yeah, so which of them?
All of the above.
As I said, all of the above, which in support with our
Yeah,
sister.
I second.
You second
Yeah, I
her.
second here, sir.
Mhm. So why do you? So I always say when you say that you need to. Okay, so analytical procedure issued in the planning stage of it generally helps to determine the nature, correct? Direct attention potential risk, correct? Indicate the important aspects of the business, correct? They are all correct. That's good. Please, I always believe in the justification. It's not about our level here. We are not interested in the answer is A, the answer is B. You need to tell us the reason why you are saying this answer. It will help us understand the issues so that in terms of writing, you can write well. All right. So let's go to the next. So we are left with 6 questions, 7 questions. Then we look at some aspect of theory too. Then we understand the issues. Yes.
Which of the following is not an advantage of the preparation of working paper? Which of the following is not an advantage of the preparation of working paper? A, to provide a basis for review of audit work. B, to provide a basis for subsequent audits. C, to ensure audit work is being carried out as per program. And D, to provide a guide for advising another client on similar issues.
Yeah, so please, what do you think the answer will be? That which of them is not an advantage of preparation of a working paper? Please, let's talk. For the next set of questions, we are going, at least the objectives are fine. I can now go to the theory for you to express your opinion on that.
So there's no answer.
See, there's no answer. There's an answer.
It appears all of them
As they say, oh, that's auditing for you. That's that's auditing for you. One of them is not the answer.
Please, the answer is D.
The answer is D. Why do you think that? I'm gonna say there's no answer. I'm gonna say the answer is D. Working papers.
Yeah, working papers. I think the working paper is serve as a base for review of audit work. That's the first one, and also serve as a base for subsequent audit.
Okay.
So if someone is going to do auditing, that person has to check the audit paper, that's the working paper, to see how the thing went on. And the second one, ensure that the audit work is carried out as per program. That one will serve you as a guide to do your work diligently. But providing a guide for advising another client on a similar issue It's not a way or the advantage of audit paper. It's just for the internal work doing during the course of the audit work, but not providing advice for the clients. Thank you, sir.
So are you trying to tell us that if you visit this particular company and you are going to audit the company, that working paper that we are going to use should not be the same working paper you are going to use for another company, right?
Yes,
Is
yes,
that a
please.
key? Thank you. So that is the right
Yes,
answer.
please.
Yes, it's correct. It's
I
correct. That's the right
support him.
answer.
I support
Yes.
him.
So our brother saying there's no answer. There was an answer because you can't use the same working paper for company A or client A for client B. It doesn't work that way because though they have similar issues, but the nature of business that you have in client A may be different from client B, or there are some certain things that is unique about a particular company. So if you decide to use the same working paper, then it means you are not a good auditor. So the answer is D. Thank you. Fine. I'm happy you are thinking this way so that it will help us also subsequently. Okay, let me see. Okay, 35. Let's do 35.
Which of the following statement is true regarding an auditor's working papers? A. They document the level of independence maintained by the auditor. B. They should be considered as the principal support for the auditor's report. C. They should not contain details regarding weaknesses in the internal control system. And D. They help the auditor to monitor the effectiveness of the audit firm's quality control.
So please, what do you think the answer is?
So the answer is B. They should be considered as the principal support for the auditor's report.
They should be considered as the principal. It's supposed to be the principal support. Principal support for the auditor's report. Thank you. Okay, so let's go to, so it's up to 40, then we start with the theory one. So I'll just paste a question there. When we finish there, we will start with the theory. We are going to do some discussion. So this is where all of us have to be talking. So it also will give me the understanding about. So let's go to 36. 36.
The overall attitude and awareness of an entity's board of directors concerning the importance of internal control is reflected in A. Accounting controls, B. Control environment, C. Control procedures, and D. Supervision.
So who is answering the question? No one is talking. Is it control environment?
Places, I think it's control. Yeah.
Control environment. It's control environment. Right. Which of the following are included in the test of control? Which of them are included in the test of control? If you want to test the control, which of them would you do? One of them stands out. So one is saying re-performance and observation. The second one is inquiry analytical procedure. C is comparison and confirmation. And D, inspection and verification. So if you want to test control, which of the following are included in test of control? The controls they put in organization. If you want to test it, what do? Do you inquire and do analytical procedure? Do you do inspection and verification? Do you do comparison and confirmation? Or do you do re-performance and observation?
Say re-performance and observation.
Why do you say that? Why? Yes. So Andrew said re-performance and then performance observation. Explain to me. When you finish, maybe Letitia will come in to tell us the answer.
Okay, so say in the test, where is the question? Yeah, in test of control in the organization, you are supposed to do these things. That is finding. So let me come again. Let me reorganize my point.
Hello, sir.
Yes, please.
The answer is re-performance observation. Says it's because in auditing they use test control to obtain evidence or audit evidence about the operating of effective controls in the organization. So the re-performance and observation they use this to gather evidence about the audit through inquiries, observation, inspections, or performance of activities.
So you think we should go in for inspection and verification or re-performance and observation?
Re-performance and observation.
Observation. True. That's if you want to test the control, you need to go in for re-performance and observation. Right, that is good. Okay. Control risk is assessed at where? At what level? Control risk. Where do we assess the control risk? Is it at the financial statement level, or the accession level, or the fraud risk factor level, or control environment level? Control risk. How do we assess it? Is it at the financial statement accession level, or overall financial statement level? And we also have control environment level. Which of them is the right answer? Okay, so management have made their assertions. So we need to assess the control at the financial statement accession level. Get to know the risk there. Those are the things that we need to know. So it is C. I want to save a lot of time for our discussion for the theory side. So which of the following is not an example of a circumstance in which additional tests of control will not be performed after obtaining understanding to plan the audit? Which of the following is not an example of a circumstance in which additional tests of controls will be performed after obtaining an understanding to plan the audit? So which of them is the right answer? So additional tests of control will not be performed after obtaining the understanding to plan the audit. Yes. Do you think the
So I go for
controls? Yes. You go for.
C. Controls are effective and evidence already obtained is adequate to support a planned assessed level of control risk, which is less than high.
So you think that one not need to be performed after obtaining the planning and the understanding to plan the audit?
Yes, sir.
We need to. You're right. Right. So our brother, our person saying D. Who said D, please? Okay. So let me come in because we have a lot of things to do. So they are asking us that which additional test of control will not be performed after obtaining understanding to plan. Controls are not because effective. We need to perform that. Controls are effective, but auditors opines that performing tests of control reduces substantive tests and will not be cost effective. That one, we need to do it. Controls are effective. Evidence already obtained is adequate to support a plan assess level of control, which is less than high. This thing is additional test we need to do. But in terms of performing extensive substantive testing will not lead to efficiency because of the word will not lead to efficiency. It makes that sentence false. Because when you perform extensive testing, it should bring about efficiency. So if you do not lead to efficiency, then it is not an additional test that needs to be performed. So the word here is the not, would not. That makes the sentence false. Is I hope you are okay with my summation. So because of the word would not. Because if you do substantive testing, it should bring about efficiency. It should bring about efficiency. The last one is that the performance of test control is documented in working papers. That one, we document it in working papers. Okay. So this is where the discussion is, where I want each and everyone to talk. And our brother will read, and then people will now begin to tell me the answer. So our brother, please, you can read.
Companies Act 2019, Act 992, Section 143, subsection 2, states, among others, that a company states, among others, that a company, person, or firm that carries out duties of an auditor should ensure that the personal judgment of the auditor is not impaired by reason of any relationship with a client that will result in a conflict of interest. Some governance experts consider the provision of non-audit services to audit clients as an example of conflict of interest and could impair the firm's independence. Required. In reference to the above concern, discuss 4 non-audit services that could lead to conflict of interest or impair the independence of an auditor.
Okay, so in accordance to or in reference to the above concern, discuss 4 non-audit services that could lead to conflict of interest or impair the independence of an auditor. So can you tell me, what are some of the non-audit services that we think if the auditor does that and he goes back to audit that same company, it will impair the independence of the auditor? Yes, so then the discussion and stuff. What do you think the auditor will do? And when it goes in there, non-audit services, the auditor goes in there again, the auditor will go and audit that same company, which we think it will impair the auditor's independence. Yes.
Sir, good evening.
Yes, please,
When
good evening.
when the auditor thinks that there is some misstatement in some of the document that he audited.
So hold on. Let me explain the question. When the auditor goes to audit a particular company, he has audited that particular client and he's done and then he's gone. Now, there are some services, so that one it means an audit service. There are some services that audit firms can also provide. But we think that if they have provided that services, then they go back again to audit that same organization that they have provided the service to. We think this type of service that they provided, it will impair their independence, or it will be like a conflict of interest. You help us with this, and you are the same person coming to do this thing, coming to audit the same thing. So we want you to tell us, or we want you to tell us that, okay, these are some, if the auditor is to render, it will, and he comes back to audit that same service that he has rendered, it will impair his independence, or it will bring about conflict of interest. That is the service that I want to know. What is the meaning of that question? Please, I hope you are clear with my explanation.
Yes, Doc.
Yes, so I want to know, it's like, for instance, you are the same teacher. So let me in your classroom, because you have to find yourself in the classroom. You have been examining students. You have been examining students, so you're an examiner. You have been examining students. And then as well, you go to and you teach the same student. But then you went to the house of one of the students. Then you taught the person. Or one or the other. You say yes, you taught the person. And then you are the same person who is going to grade the person that the father has paid you huge amount of money. So the person said, oh, you are a good teacher, so kindly teach my word for me. And the person paid you huge amount of money, which is even more than your monthly salary. do you think that services that you have provided will impair your independence when you are working? Yes, it will impair because you have gone extra mile to teach the world extra classes in a house. And then the father also have paid you huge amount of money. So even if you are marking, what you see, oh, this student, even though you didn't do well, let me just ask you because the father gave me a huge amount of money. We are human, we are likely to do that. So now, with this example that I've given, just because you are teachers, I've given you the example. Now let's come back to the auditor. The auditor may have provided some service for the organization, which is non-audit services. And I want to know whether you know some of the on-audit services that we think that if the auditor has performed that, is likely to impair his independence or bring about conflict of interest when he used to go back to the same organization to audit that same organization. So I want to know those type of audit services that you know. Yes.
Sir,
Yes, madam.
bookkeeping and accounting services.
Right.
So when the auditor provides bookkeeping or prepares the company's accounting records or their financial statements, and the same person comes back to audit their financial or their finances, it is like the person is auditing his or her own work. So this one creates an impairment or conflict of interest.
Well noted. Well noted. So if the same company, so you said that if the same company has one or the other prepared an account for that same, and then it goes back again to audit that, so it's like he has helped by preparing accounts, and then if he has prepared an account and it goes back to audit that same company, it's saying that if preparing the account and going to provide services in terms of audit may impair their independence. That is very okay. Yes, one again. Yes.
Implement item for entity, and then they later go there to audit that same firm. That will be a problem to undermine the objectivity.
Okay, that is good. What again will bring about conflict of interest?
Management or consultancy services.
Management and consult service. Example.
Like giving the management decision or advising them on the way they should do their things.
So maybe in terms of you advising them investment, you are giving investment advisory services. That one can where you are giving them investment advisory service. They are the same business going to audit them. Again, you even giving them HR and human resource consulting services in terms of their recruitment, helping them to recruit ready to go for the organization, and then you go in again that same company, you have done that. I don't think you do that. Another non-audit services would be that maybe you want to add up. If you want to add up, please, you can add up before I come in.
Myself, when I was saying it, I was 50-50 sure.
Oh, it's correct. It's correct. It's correct.
Whether it's correct.
It's correct. Yes.
Sir, can tax services also be a conflict of interest? Tax services.
Stop.
Tax.
Yes. Yeah, tax. Yes. It's like you help them in tax advisory services. Yes. So the same auditor, he has performed a tax advisory services for you, and you're asking that same auditor to come and audit your account. No, it will bring about conflict of interest. So all this thing will impair him. Then as well too, maybe the same auditor happen to be your internal auditor. The external auditor happen to be your internal auditor. So you have an internal audit in your organization who ensure that there is compliance to the controls in your organizations, or there are compliance to the rules and regulations, or all the issues that the external auditors raise. The organization have complied to them. But that same internal auditor you have happens to be your external auditor. In that case, it still brings about conflict of interest. So in your discussion with this question, you need to tell us, you need to discuss and tell us the issues that you think can bring about what the audit can bring about conflict of what interest. Okay. Now, another set of questions that I want to put here is this. So let me highlight it for you, no color, and make it bold for you to see. So all these questions are last year questions that they did, and we are discussing. All right. So audit opinions could be qualified or unqualified. A qualified opinion must be expressed by an auditor when certain situations are present, required. With an aid of examples, explain two basic situations that could give rise to a qualified opinion. Yes. With an aid of what? Examples. Explain two basic situations that could give rise to a qualified opinion.
So
Yes.
thinking about it, we'll come
Yes,
back.
think about it. Think about it. I'm happy you're thinking about it. Yes. No, no, your people said they are thinking about. There's a question there, and they are thinking about. So I want you to answer. It's not that we are quiet, but they are quiet because they are thinking.
So let me come in.
Please come in.
A qualified opinion is given when the auditor concludes that there is a material misstatement in the financial statement.
Okay.
but not pervasive. Or the auditor cannot obtain sufficient appropriate audit evidence. The evidence may be material but not pervasive.
So the question was saying, when you tell us that, you should give examples. So you need to come in with it. So it's like when I see this, I mean this. Like, do I want to, so that at least you can explain issues to someone who one or the other doesn't understand the issues yet.
Sir,
Yes, madam.
so when an auditor is not allowed to verify inventory due to restrictions at a client's warehouse, and the client's warehouse is that is where their materials and other things are kept. So since the inventory of the material, the auditor cannot confirm its existence, we are saying that the auditor can issue a qualified opinion due to a limitation of scope. That is, he or she was not allowed to enter their safety places to take the required evidence that he needs to operate.
That is good. So, so a qualified opinion. So the qualified opinion, are you saying that the evidence that he wanted to obtain, was it something that if it doesn't obtain, it will affect
Yes,
the, would it affect, is the evidence so serious that you need to get it? Is the
yes,
evidence so
yes,
serious you need to get it?
because yes, the auditor needs to obtain sufficient evidence, and those
Mhm.
ones also are parts of the evidence he or she needs.
So now, our question back to you is that
Mhm.
if those evidence are something that he needs to get it, by all means, he needs to get it, then it means that that qualified opinion will be something that will be like a disclaimer. Is that the case? Because this one, it should not be like it is just a type of qualified, but it's just that he will give a disclaimer opinion because
Okay.
the issue is pervasive. Because based on your statement, he said that he wouldn't get access to count the inventory, and that one is something that he needs to do to obtain the actual evidence. So if he actually need that evidence and he didn't get it, then he will not give a qualified opinion, but rather he will give a disclaimer. I hope you get what you said.
Yes, please.
Yes. So that is what it means.
Okay.
That is what it
Okay.
means. Okay. Thank you. Thank you for coming. Yes, another person. We said example. So yes. Or if yes, please, I'm listening.
So when there is a material uncertainty
Material uncertainty. What do you mean by material uncertainty? We don't
related
understand.
to a specific matter, like maybe tax dispute,
Mm,
like the company is facing a significant outcome of uncertain tax dispute can also.
material uncertainty.
I'm trying.
Okay. I know you are trying. I know you are trying. We needed you to explain further because the understanding was not getting in terms of the material uncertainty. So that's the reason why I'm still contemplating. Because okay, so based on what you have said, can I ask that under what circumstance would they be a qualified opinion? So if you're able to tell me, then we can look into we understand you better. So under what circumstance would the auditor issued a qualified opinion?
Say, when the opinion indicates that the financial statements presented they are fairly, except for a specific matter.
Except for a specific matter. And that
That is
specific matter,
That is described in the audit report.
That is described. So what will be described in the auditor's report? That is the
Yes.
example that I want you to give. What will be described? So except for. So now you are telling me the except for, it will be for this or it will be for that. That's what I want you to explain.
That's why I said that when the auditors realize that there is material uncertainty.
Material uncertainty.
Yes.
Are you talking about material misstatements? Is that the case?
Okay, maybe I don't use the right word. Okay.
Okay, if it's material misstatement, fine. So material misstatement. So the question would be, is a material misstatement pervasive or is not pervasive? That's my question back to you. Is a material misstatement pervasive or is not pervasive?
So one is pervasive.
When it is pervasive. So when it is pervasive, class, which type of opinion would you give? Class, if the issue is pervasive.
Class L.
So let's help our sister. Yes.
Opinion.
You give what?
Adverse
opinion. So our brother is saying that if there's material misstatement and it is perverse, you will give what we call an adverse. Very, very true. And now we are not looking at adverse opinion, we are looking at a situation whereby it is not pervasive.
Sir.
So yes, please.
Let's say that in the financial there's an aspect that you need to deal with. For example, we are aware that when you have assets, you need to consider depreciation. So for one reason or the other, it's realized that depreciation was not that aspect of it that needs to be dealt with. Depreciation aspect is not dealt with. Not entirely affect the statement. It may affect a portion of it, and that is not pervasive.
That case is not what? Pervasive.
Pervasive. That matter, you have to give qualified opinion.
So hold on, let us address or let's maybe say a contribution to what our brother just said.
Yes, I'm reading something somewhere.
Okay, read. We are allowed.
An auditor will issue this type of report when they have identified a limitation of scope or a material misstatement in the financial statement, but have determined that the misstatement is not pervasive in nature. And I said that some examples of issues that may lead to a qualified opinion report include inadequate documentation of certain transactions or accounts, then disagreement with management over accounting treatment, material misstatements due to errors or fraud, then scope limitations such as the inability to obtain sufficient audit evidence.
So what we are reading, yes, indeed, that the rest of the answers I was expecting.
Okay.
So those issues will tell us, okay, we need to do a qualified opinion, or we don't need to give a qualified opinion. So when you read, you added some examples to it. Those were the issues I want you to read in your write-up. So in your write-up, they are telling us that, okay, an auditor can conclude that the misstatements are material, are not perverse. In that case, we'll give a qualified opinion. And as you rightly said, if the accounting policies that were selected, though they were not used, they selected it and they worked and they have gotten their answer. if it is in terms of their appropriateness of the policies that they selected, it means it's possible they may raise an issue concerning that. In terms of maybe the application of this accounting policy, though it's a misstatement, but it's material, but it's not pervasive. Because maybe you took, instead of you to apply straight line method, you rather use imbalance method. So in terms of the appropriateness, you are wrong, or you have gone. So we will say that yes, indeed, the financial statement has misstatement, but then they are material, but this material, they are not pervasive. They are not pervasive. And then another way also we saying there is a qualified opinion is when in terms of sufficient appropriate evidence. If we are not able to obtain sufficient appropriate evidence, and we concluded that though we were not able to obtain sufficient appropriate evidence, but they were not material, they were not pervasive, then we can say that the issue they can give a qualified, based on the issue that's happening. For example, maybe the auditor. So in the examples, you can say that maybe the auditor realized that the records of the organization have been destroyed by fire or by flood or something, natural disaster that occurred. It's not that you are going so in that case, yes, you will give a qualified opinion, and then you state that indeed you were not able to obtain sufficient evidence, and you think this sufficient evidence is not pervasive. That's the reason why you are giving a qualified opinion. Another one also is that management prevented the auditor from even asking external confirmation of some of the accounts. So it's not that it is pervasive. Management is telling you that you can't call our banks to ask for this information from the bank, or you can't call this creditor to ask for this. So if there is some limitation that is imposed by management, and auditors saw that, okay, this limitation that is posed by management is not all that serious, not all that pervasive, then they can issue what we call a qualified opinion. Then as well to maybe this inventory count, when we appointed the auditor, by the time we appointed the auditor, there was not enough time for the auditor to go and do the inventory count. So in that instance, he was not able to obtain sufficient evidence. And that is not that we are preventing him, it's the timing we appointed the auditor. So in that case, the auditor can issue that based on the timing except for the timing that I was appointed, I was not able to obtain sufficient and appropriate evidence concerning this inventory. That's the reason why I'm giving a qualified opinion. Please, I hope you're okay with these examples I've given.
Yes, sir.
All right.
Yes, sir.
Right.
Yes, sir.
Let's look at the next set. Our brother, please, you can read.
It has been recommended that audit working papers should always be sufficiently complete and detailed to enable an experienced auditor with no previous connection with the audit subsequently to ascertain from them what work was performed and to support the conclusions required. Describe 4 benefits that the auditor will obtain from working papers that meet the above requirements.
Yes. What are the benefits of getting working papers? That's it. The whole thing you read, that is what it means. Yes, working papers. We have discussed that one, right? Just few minutes ago. So let us look at this. The benefits of working papers.
Sir,
Yes.
it enhances credibility.
It enhances credibility. Why do you say that? So you need to explain, to give us the reason why.
Sir, having working papers, it can demonstrate your experts and credibility in your field.
But then
Making it
by the way, explain what you mean by working papers. Then you can tell us the benefits of using the working papers. I hope you get my explanation, that you need to explain to us what do you mean by working papers and tell us the benefits we derive from having working papers. That will answer the question perfectly.
let me try.
Please try. I'm happy you are trying.
They are documents prepared by an auditor during the course of an audit.
Okay.
Or when the auditor was engaging in the audit procedure, there are some papers that he prepared.
Okay.
But your okay is like,
yeah. So so it means that I'm not that convinced, but I want to state things right for me. That's why I said okay. There's no wrong answer, as I always say.
say, they provide a record of the work that they have done.
They provide a record of work done. Right. So what it means is that if the auditor want to document his processes, he always have some of the records that whatever things you document in the working papers, which will one or the other. So give him, if he's able to obtain this evidence, he'll record it. So if you want to reach a particular conclusion on the process that he has gone through, or you want to form an opinion on the process that he has gone through, the working papers will serve as a guide for him to reach a conclusion. Is that the case?
Yes.
Right. So based on this explanation, can you tell us, or can any of you tell us, the benefits of you having, or the auditor having, working papers or obtaining working papers? What are they?
Sir.
Yes.
For future reference.
For future reference. Okay.
They provide historical record that can be used for future audits.
Good. That is very good.
Yes. And then also helping to understand the client's business over time.
Okay.
And when in future there is a problem, maybe there is a legal problem, they can use it as a reference.
Right. I'm happy you are telling me this. Good. All right. So our sister has answered them all. So most often, if they gather evidence, they have it in the yes.
Please, the enhanced credibility, is it also a benefit?
Okay, so the enhancing credibility, if you want to form an opinion based on what you record in what you have recorded, it will inform you the type of info, what type of opinion you will form, and we want to know that the opinion you are forming or you are giving is credible. Is credible. So based on the evidence that you have, based on the review that you have done, so if you want to justify your opinion, it is the working papers that will help you justify your opinion. So based on it, we can say that if there's litigation, we can say that your evidence that you provided is credible based on the working papers that you had. So it can bring about credibility of our opinion or justify the opinion that you will give concerning that particular. Okay.
So,
Yes.
and again, it provides assurance that the work delegated by the auditor has been properly completed.
Good. 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 Good.
Karen, where we?
Right. So thank you. The next set, then we can end. Our brother can read as I work on the font size.
You are an audit assistant of Amache and Associates, a
When you
firm
finish
of
answer it, you
chartered
always read.
accountants. Your firm engaged an intern who would like to know more about analytical procedures required with reference to ISA 520 analytical procedures. Explain the term analytical procedures, and then B, explain the different types of analytical procedures available to the auditor. Thank you.
Thank you. Thank you. This one, they are telling you to explain analytical procedures according to ISA 520. So, what is analytical procedures, and what are the different types of analytical procedures that we have?
So, Doc, sir,
Yes, please.
let me start with the meaning
Mhm.
and just will continue. So, sir, you taught us that analytical procedure has to do with the evaluation of the possible relationship between financial and non-financial data.
Mhm.
In other words, they are used to evaluate a plausible relationship between financial and non-financial data. And it includes calculating ratios and comparing them to previous year's results or industry standards or budgets. Thank you.
Good. So, based on the definition that you've given us, what are the different types of procedures that are available to the auditor in terms of the analytical procedure?
Okay, sir. So with the types, I'll mention one of them.
Mhm.
We have ratio analysis.
We have what?
Ratio analysis,
Okay. That's good.
which is used to calculate financial ratios. For instance, the net profit margin and gross profit margin and the rest.
Okay.
So that when you do that, we use it to compare previous and then the past.
Okay. Mm-hmm. So ratios, you compare the previous and the past. Okay. What type of another thing we know?
Say trend analysis,
Trend analysis. Okay.
comparing financial data across periods to
Good.
identify unusual patterns.
Hmm. Which one again? That is good. I'm happy about that. Yes. The
Eh,
next one.
comparative analysis.
Comparative analysis. Okay. Okay. So they are saying describe 3 situations in the course of audit when procedures can be audit analytical procedures can be used. Please, you said I have added another question saying that describe 3 situations in the course of audit when analytical procedures can be used. 3 situations. So situations. I want to know the situations when analytical procedures can be used.
So we have the planning stage.
The planning situations.
Okay.
So even if it's a planning stage and you are telling us the situation, let us know the situation. Yes.
Say planning the audit,
Planning what?
the audit.
No, they are not
But
situations.
there are not situations. Oh,
Yes.
yeah, I ca-
So we can do that. One, during risk assessment procedures, they are situations. So risk assessment procedures, if you want to assess the risk of material misstatement, then we can do these analytical procedures to know the risky areas. So when you're doing risk assessment procedures or when there's risk assessment procedures, it's a situation. That's where we can also look at. Again, we should also note that analytical procedures can sometimes can lead to, or when you want to do before a substantive procedure, you need to do analytical procedure. So in doing a substantive procedure, one of the way of doing substantive procedure is that you need to do analytical procedure. So the situation is, if you want to do a substantive procedure, then you have to do analytical procedure as well. That is what you must do. So in terms of you going to do substantive procedure, and I hope by now you have gotten to know what we mean by substantive procedure, because I've talked about it before. So if you want to do substantive procedure and you want to assess the risks of material misstatement in some of the assertions that have been made, as part of the substantive procedure, you need to do analytical procedure. That is what you need to note. Then as well too, if you are forming your final conclusion, the situation is that if you want to conclude your procedure about your overall audit procedures that you adopted, we can also do, or you want to form your final conclusion about the financial statement, whether it is consistent with your understanding about the organization. You can also do analytical procedure. That is what you do. Okay. So let me see whether I can get another one. So can you tell me the advantage of okay, so let me bring this question for you to see so that you can now tell me the answers. So this is also last year question. Our brother can read for us.
Pillow Limited is a manufacturing company based in Ghana, and they are considering appointing an external auditor to conduct their annual financial audits. The company has shortlisted 3 audit firms and is currently evaluating their proposals. Required: discuss 4 factors to be considered by the company before appointing the external auditor. Thank you.
Thank you. So answers. So the question is asking us, discuss 4 factors to be considered by a company before appointing the external auditor. What are the things the company must do, must do before he appoints an auditor?
Okay, Doc, let me start with 1. I am looking at the first one is independence and objectivity, or
Independence and objectivity. Okay.
Yes. So here I will explain by saying that as the auditor must be independent of the company and also free from any relationship or interest that could compromise the judgment of the auditor. When that is done, it will ensure that the audit opinion is unbiased or credible. Thank you.
Good. Thank you. I'd rather have done well. Yes.
The company also has to consider the fees and the scope of the work before they can appoint an external auditor.
Okay. Good.
The professional qualification of the auditor too.
Also, professional qualification and expertise. Yeah.
Professional qualification and what, please?
Reputation, expertise.
Okay, good. Remember, they were saying discuss, so you need to explain. It's not that just telling us short answers. Your level, you don't need to tell us short answers. You need to explain. Okay. So you look at that one too. So you need to deal with, in terms of their professional issues, you need to know whether the auditor or the audit firm, they have the competence, they have the resources that they are supposed to have, in terms who are the referees of these auditors, who can confirm their professional behavior. You need to consider their fees you are going to pay to the external auditor. You need to know whether they perform their exercise with due care and then skepticism, professional skepticism. You need to also get to know about their quality control. You want to know whether the auditor will adhere to the quality control, confidentiality, integrity, professional behavior. You want to look at all these ethical issues, whether the auditor complies with them. You want to know the independency of the auditor. In terms of registration, is the audit that particular audit firm, is it registered with the registrar general of companies? So if you happen to find yourself in Ghana here, is the auditor complying with the local laws, standards, or international standards on auditing, as well as IFRSs and IASs? So we need to find out whether the auditor comply with all of them to now ensure that, okay, this auditor you are going to give this into, we think that the auditor qualifies to do that. Okay. Then I'm looking for a case where, okay, this one is fine, so that I can leave you with one full discussion. I'd rather please read for us, then we can end with this.
Pianso Cannery processes tomatoes, garden eggs, and onions and sell them in cans. The company has its factory located at Nsahum in the eastern region of Ghana. The company borrowed a huge sum of money from the bank to start and operate the business. Its preservatives and cans are to a decline in the company's profitability, making it difficult for the company to repay its loans on time. The management of the company has concluded that the best option is to sell the business. This matter has not been disclosed in the financial statement required. Based on the information provided above, describe the audit report appropriate to be issued in the case of Pianso Cannery. Thank you.
Right, thank you. So please, our colleague just read a question. I want you to analyze the issues and tell me what we can do here.
So, sir,
Yes, madam.
the case study is a situation where the Pianso Cannery is facing financial difficulties due
Mhm,
to inflation and then CD depreciation. And
mhm,
because of this, they are not able to pay their loans on time, or they are unable to pay their loan, and they are deciding to sell their company. So that is what the case study is about.
So I want you to tell me, yes, so yeah, that is a case study about. So we want to know, describe the audit report appropriate to be issued in case of this Pianso cannery. What do you think they will issue based on what they have now?
I'll come back again.
Thank you. Waiting for you. Yes. Yes, who is coming? We want to conclude with this last. Yes.
Let me try.
Please try.
I would say this is an undisclosed significant event. Because since they have failed to disclose this in their financial statement, it's an improper way of accounting standards.
Okay. So what report would you think, or what report would the auditor issue?
Undisclosed significant event.
That would be the type of. Did I teach you that that type of report in my teaching? Did I teach you that?
No, sir.
So please come in again.
Okay, so I'm coming again.
Yes, please.
Okay.
Sir.
Yes, madam.
The type, the audit's opinion that the statements. One, you see, the auditor conclude that their statement or their financial statement account is misstated, because they have it in mind that they will sell it, but they have not represented it in their financial statement to know whether the firm is still going on, or they are ending everything. So number one, their financial statement is materially misstated. That is the qualified opinion. Yes.
So which type of opinion would they have, and every type of reports would they have?
They can have adverse
So don't say
opinion.
they can have. Be straightforward. They will have.
They will have adverse opinion because their financial statement as a whole is misstated.
Okay. Who is in support with our sister?
Sir,
That you need. Yes.
can we also say they will have a qualified opinion?
The qualified opinion, yes, they can have a qualified opinion. They can have the other
Disclaimer.
opinion. I want you to justify why you think it is this. Because everything is about justification. So you need to justify why you think they should have that type of opinion.
And then I will stand by. I will stand by them having a qualified opinion since there was some omission of materials in their reports.
Okay. So now let us understand the issues, then we can draw. The opinion, they can have a qualified or adverse opinion. And what it means is that, yeah, so it's correct. What our sister said is correct. And what about also said is to say a qualified opinion to is so right. Now, let us look into the question. They told us what they do into. They told us where the company is located. They said the company borrowed a huge sum of money from a bank to start and operate the business. Its preservatives and cans are important. So telling about how the description about the company. A recent inflation and city depreciation with consistent and then consequent economic downtime have led to a decline in the company's profit, making it difficult for the company to repay its loan. So it's like they took a loan to start a business, and they are finding it very difficult to pay their loans. And this is not fault of theirs; it's a result of inflation, depreciation, then as well too, in terms of the economic downturn. Management of the company has concluded that the best option to them is to sell the business. And this matter does not been disclosed in the financial statement. Now, when they say to sell the business, what it means is that they are concluding on the going concern. They are talking about the going concern. Ability of the business to continue foreseeable future. It's not there. That is the reason why they are saying, concluding that the best option is to sell the business. But this matter have not been disclosed in the financial statement. Because when you're preparing the financial statement and you intend to sell the business, then don't prepare the financial statement based on the option of going concern, but based on liquidated values or based on break-even value, meaning that you want, or break-up values, meaning that you intend to halt your business or intend to stop working. They didn't do that. So because they couldn't state that, there is doubt on the going concern, because there is doubt on the going concern, and that one was not disclosed in the financial statement. Now, looking at what they are saying, looking at the increase in inflation or inflation going up, city depreciation, and then the economic downturn, it is making their sales low. And if there is no disclosure on this one, what it means is that it is likely to affect the decision of the auditors. So the auditors need to find out what was the reason why the organization is not preparing their financial statement based on going concern. So they need to get evidence from this. But looking at it, because they were not able to give more disclosure, or they're not able to disclose the information very well, the auditors will now give a qualified opinion. But if they realize that this information they didn't disclose is too high, such a way that it will affect other things, then it means that it will give what you call adverse opinion. So that is what it means. So if the information they're supposed to disclose is not high, they will give what we call a qualified opinion. But if it is high, then you will give what we call an adverse opinion. So The situation lies between a qualified opinion and adverse opinion, depending on the depth or the intents of this particular um, issue concerning the going concern. So,
Sir,
yes, please.
what about disclaimer of opinion?
Disclaimer of opinion means they were not able to obtain sufficient evidence. This one is about disclosure.
Okay.
This one is about disclosure. Disclosure. So disclosure will bring about a statement, material misstatement.
Okay.
So I will leave you at least per what we have per this discussion and per all our recordings. Just find time, listen to them, and I hope very well that you'll be able to answer your questions if they bring it to you. And then if as well, if someone bring an issue to you, be able to explain based on your knowledge that you have gotten here. Apart from that, if there are no issues here, then I would like to end the class for today and then wait for you if maybe you have any other questions for me to answer. Maybe another time when you book a meeting with me, I'll try my possible best to see how I can meet you. For me to know who you are and then get to know who you are. I'm not sharing the objectives with you. I'm sorry. I'm not sharing the objectives with you. The videos are there. You can go and watch it. So I'm supposed to know you, get to know your faces. And I don't know whether this time, since you're at home, I may create inconveniences for you. But if you think that you're okay for me to see your face, I'll be very glad. So I have turned on my video for you to see my face. My face is clear or it is not showing.
Yes, sir. It's not showing.
Is it?
Sir, it's not showing.
It's not showing. Oh,
Yes, sir.
okay. Maybe because of the net. Okay, so it is now showing. So this is me. When you meet me anywhere, you can. When you come for graduation this December, you can search for me. I'm at Department of Accounting. So during your graduation this December, I heard you are graduating this December. So when you come, I'm around. We'll meet. I'm not able to see your face because of your environment you find yourself. But if you are okay with it, you can also, yes, okay, this is Mr. Kwame. All right, right, that is good. Who else again? Who else again who would like me to see your face? So that when I see you, I can recognize that we are one student of this class. Okay, so since all people are here, let's see how possible best we can perform in terms of our end of semester at the same time to the quiz. And I believe very well that per the recordings we have so far, if you are to pay attention to them and the questions we have solved so far, you have pay attention to them, I believe very well that we'll be able to pass these exams and as well to when auditors come into your organization, get to know how they perform their duties, and then if they even ask you to make some representation, you should be able to do that. So thank you very much for your time. I'm hoping to see you another time. Even if I don't see you online here, I should see you face to face when you come for your graduation this year. So all the best in your examination, your quizzes.
Thank you.
Thank you, sir.
Thank you,
God
sir. God
God
bless you,
bless
sir.
you.
bless all of us. All right, so bye-bye for now.
Bye bye.
Bye bye. Thank you.
When she said,